Well, there was lots of volatility in the stock market last week. Does that mean the market crash has another wave coming, or are we on the edge of a boom? I will show you what to look for and give you my answer to that question, plus analyze the stock, commodity, currency markets, and then we'll do the day trade of the week on AGFY. Stock market crash or boom? What is next? Well, the volatility that we've had lately shows that there is a lot of uncertainty among buyers and sellers. When you get these big price swings, it really occurs because there's an intense argument going on between the buyers who think that the market deserves to go higher and the sellers who think that the market deserves to go lower. Now, right now, the buyers are losing the war. If we look at the trend in the market, it's down. It's been down since January. And that means the sellers are in control. For the buyers to take control, we have to break downward trend lines and start building rising bottoms on the index charts. I will show you that in just a moment, how that looks. It is rare that markets make V-shaped bottoms. So I don't think we're going to see a boom in the very short term. And again, I'll show you in a chart how this looks. But there are some factors that are positives for the market. First, we are going into earnings season, which will take the emphasis and the focus off of inflation and rising interest rates and put it on corporate earnings. And if earnings start to be good, especially given how much stocks have fallen, that could be the catalyst that brings the buyers in. There's also the seasonality aspect. At this time of year, typically October until May, the market tends to do the best. So let's jump over to a chart of the Dow 30. And the key thing that we need to understand first is the trend. So we've got this short-term trend line that kind of cuts across these points there. And you can see that the market is fighting with that resistance, that downward trend line. It hit it on Thursday. It actually went above it Friday morning, but then fell back below before the end of the day. And that's the battle that's going on. The sellers control that trend right now. If the buyers can break that trend, then we could start to see a reversal. It's very similar to what we saw back in July. You can see here on the chart, we had this downward trend line here, and notice that we were fighting with the trend line for a few days and then ultimately broke through and had a good little summer rally. The difference is that occurred after the build of a rising bottom. Here we've got a double bottom. A double bottom is still good, but it's not as good because rising bottoms are a sign of buyer strength. They're a sign of optimism. So we don't have that just yet. We could break it as early as Monday, so we'll watch for that. But until we break it, I don't want anyone to think that the bottom has been made yet. Now, if we do break that, we still have a longer term reversal that's going to take some time because the longer term downward trend line is up there. You can see it hit it here and here and here. And we could rise really nicely for a few weeks and then get to that longer term downward trend line where we would probably get stuck. So the short answer is I don't think we're going to see a quick turnaround in the market. We may see a slow, gradual turnaround with some waves up and down as buyers begin to build confidence. And that process could start as early as next week as earnings season really gets going. But until we start breaking these downward trend lines, don't get too optimistic. It's an idea. There's lots of reasons why the market can bottom here, but there's no facts for it yet. There's no proof that the market is trying yet. We had a good reversal on Thursday, which is a good sign that we could come back from that weakness and make really a huge swing in Dow points that day. But we haven't started to build optimism yet. If you keep watching these videos every week, I will tell you when it starts to happen, and it could be next week. So make sure you're subscribed to the channel. Turn those notification bells on. I upload these videos every week. It's free analysis. May as well do that. All right, let's get into the normal analysis that I do each week, and we'll start with the US markets. Jump over to my website, Stockscores.com, and we're going to take a look first at the 30-day, 60-minute chart of the S&P 500. What do I look for when I look at this chart? Very simple. Who's in control? Buyers or sellers? Falling tops? means sellers are in control. If we can start to build rising bottoms, then the buyers are in control. Notice the sentiment stock score is in the red. That's because predominantly the sellers are in control. If, this is the if, we can break this downward trend line from a rising bottom, then the buyers will take control. They'll win a short-term battle for control of the market. That hasn't happened yet, but that's something to watch for next week. All right, let's take a look at the longer-term chart, more appropriate for the long-term investor. This is the 3-year weekly chart. Notice we had buyers in control for a long time. That was broken in January. And since then, the sellers have been in control because we've had falling tops. If we can start to build some rising bottoms on this chart, then conditions can improve. Now, in the very short term, we've got this downward trend line, but big picture, we've still got that downward trend line. And so what we need to do is make this little head and shoulders bottom by making a right shoulder and then breaking that downward trend line. And that's why I say I don't think a turnaround is going to happen overnight. It's going to take some time to build those patterns, build that optimism, build the rising bottoms, and we need some catalysts. Maybe we need the Ukraine-Russia thing to cool down. Maybe we need earnings to be really strong relative to the price pullbacks that we've seen in those markets. Maybe we need inflation to start to settle down so that the rising interest rate environment is going to soften. Well, none of those things have happened yet. They're all things that could happen. Those catalysts are what could drive the market to break those downward trend lines. All right, let's take a look at the small caps in the US. Symbol for that is IWM. And here you can see that support, which is a floor price, has been held over the last few months. We hit it here, we hit it here again, and then this week we bounced off of it again. That's great that we're making that triple bottom. We still need to break the downward trend line. It's just like the S&P. We need to break up through that. Again, could happen next week. The scores here are a little better, and I think that's because the retail trader tends to buy small cap stocks, and they tend to do it starting in October. I call it stock trading season. October till May, sometimes June, sometimes it starts in November, but sometime in the fall until the spring is historically the best time of the year for the market. And specifically in those lower price stocks that attract that retail investor. All right, how about the Canadian markets? T.XIU is the symbol for the TSX. And on the daily chart, what's the dominant trend? Down. Have we broken a trend line? Nope. So that's what we need to do. For now, remain bearish there. Look at the 3-year chart, and you can see, just like the S&P, the upward trend was broken. We're now in a downward trend. We need to make that bottoming process, breaking the downward trend line in the weeks ahead. No sign of it yet, so still remain cautious. As a short-term trader, we may get a short-term buy signal if we can break the downward trend line on the intraday chart. So here is the 30-day, 60-minute chart. And if we could break that from a rising bottom, okay, we'll get a short rally that day traders and swing traders can take advantage of. But if you're a longer term trader, a position trader, or a long-term investor, you really don't want to be watching this chart time frame. It's too short term. You want to be looking at that daily or weekly chart for these patterns to play out. And again, I'll do this work for you every week. Just make sure you're subscribed here, and I'll do that analysis for you. All right, how about commodities? Let's take a look at gold. Gold is still in a downward trend. In the short term, it was trying to bottom this month, but it really couldn't break through resistance. So it had a little rally there and it's fallen right back. So the sellers are still in control. Be cautious with gold. Looking at that 3-year chart, you can see the dominant trend is still down. We broke through support, and that points to lower prices for gold until that downward trend line can be broken. How about oil? USO is the symbol I like to use for the ETF. And oil on the daily time frame doesn't look all that strong. However, when you go to the 3-year weekly time frame, what you see is that the long-term upward trend is right where we're at right now. Okay, so I started at the low, and I just drew a line that best fit as many of these inflection points. And that's exactly where we are now. We bounced off of it 2 weeks ago, which is what you would expect. The question now is, will the oil market continue to rally up to the highs, or is it going to make a falling top and break the upward trend line? It's the exact opposite of what we're looking for in the overall market. So that's what you want to watch for. So for now, I would say it's a neutral chart because we are still in that longer term upward trend, but we're at a critical point. Are we going to hold the upward trend line, or are we going to break down through it? You can see when price breaks down through trend lines, you can get dramatic sell-offs. That, of course, was the COVID crash. But is it going to happen for oil again? Are we going to break that upward trend line or not? Again, I'll keep you updated here each week. All right, how about currencies, which really affect those commodities? One of the things that's hurting commodities like gold and oil is the rising US dollar, and it continues to be in the upward trend. It could be making a falling top here, and if it breaks the upward trend line from a falling top, then we could see some support for some of those commodities. That hasn't happened yet. It's something to watch for. I always like to give you some things to watch for through the week. That's something to keep an eye on. If we look at interest rates, which is really what's driving the US dollar, TBT is the symbol for the inverse ETF for treasuries, you can see that it's in a strong upward trend. So as long as interest rates are rising, the US dollar is going to hold up pretty well. If we start to break down through this, then you'll probably see the US dollar break down. You'll see some strength come into the stock market, into the commodity markets. These things are all interrelated, and that's what you want to watch for. Now, we've had lots of volatility in the last couple of weeks. We saw that already. And we're also seeing the market at a support price, at a floor, which, if broken, would likely lead to more of a crash. So what's happening in the fear chart? What is the fear chart? Well, you can look at the chart of the S&P 500 futures implied volatility. So the symbol for that is UVXY, and there's a few different ones, but this is the most liquid one. So if this is rising, that means fear is going up. And we can see that fear has been rising steadily over the last 4 to 6 weeks. And that is a sign that markets are getting a little nervous about a bigger breakdown. Now, it's actually not that big of a move just yet, so the market's not really scared, but it is showing some concern. And the critical reason why is if we go back to that S&P chart and look at it on the 3-year time frame, what we're seeing is these floors are being broken. We're just kind of hanging out right there at that floor. But if we get a strong move down here, then our next floor is there, and then we could go all the way down to this one, which of course is the floor from the COVID crash. Could it happen? Yes, it could. Do I see a strong sign that it will happen? No, I think there's some reasons to be optimistic, but there's no conclusive reason to think the bottom has been made yet. So let's look at my ratings then. So on US stocks, bearish on both time frames. Canadian stocks, bearish on both time frames. Gold, bearish on both time frames. Oil, I've got neutral because we are at that upward trend line where the market could find some support. US dollar, bullish on both time frames. Bitcoin, I didn't look at that chart, but it's ugly. I think you really need to avoid. Crypto right now, it has not shown any optimism in a long time. I've been bearish on this for a long time, and there's no reason to think it's going to reverse until the downward trend is broken. And then, of course, interest rates still in that upward trend. All right, let's take a look now at the day trade of the week. This is an example of a stock that we traded in our active live service on Stockscores. That's a real-time webinar that I run all day, every trading day, where you can sort of see my algorithms and my computer analysis running in real time. And one of the things that we look for are stocks that are trading with abnormal volume and strong liquidity. And then I watch those. I build a watch list for subscribers to that service. We watch those stocks for something called an action candle breaking from a predictive pattern. So that happened on Friday, on a day when the market was down. We had this stock trading more volume than normal, so that's why it was on the watch list. And then it broke from a pennant pattern with an action candle right there. So we then buy at the white line price, which was $1.27. This is a penny stock. And our support was at $1.14. So for $100 of risk, this position is going to be 750 shares. If you're willing to take $1,000 of risk, then your position would be 7,500 shares. That's $950 of capital. You can't margin a stock under $3 generally. So you got to put up all that cash. Not that it's a lot, But at the end of the day, that trade was up about 1.2 RR, which meant a $120 gain for every $950 of capital that you put into the trade. That was a 12.6% return on a one-day hold on a really pretty quiet negative day for the market. So even on days where the market's moving down, you can be a buyer of these stocks. I call them alpha stocks. They're stocks that are trading on their own story and can do well despite a negative market. All right, so do you think it's crash or boom? What's your vote for the next couple of weeks? Are we going to go lower, or is the market going to try to go higher? Leave your comments in the comments section. I look forward to reading those. Of course, if you're not subscribed to the channel already, please do that. Hit the like button, and most importantly, trade well.